So you probably clicked on this video because you are in this position where you're constantly failing accounts. You're not only costing yourself time, but money, and you want to reach that next stage where you can actually get funded and get some payouts from all your hard work that you've been putting into this trading career. And essentially, I understand exactly where you are, and that's why I'm going to give you the source that I've given my students, and that's simply giving the exact system that I'm using on a day-to-day basis, as well as my students that are getting funded and getting payouts, right? But there are first a few things that we need to look at in terms of the probability, what is the success rate of traders, so that we can completely digest this thing and give you the step-by-step on exactly how I'm doing it myself. So the first thing that we can always look at is from Google here, what are the traders that are actually passing funded accounts right now? Roughly 90% of traders don't make it through evaluation process. Among Forex traders, only about 4% secure funded accounts, and even smaller group, just 1%, maintaining or holding their funded accounts after their first payouts, which is actually very low stats in terms of what prop firms are producing and how many traders there are currently out there. So if we look at 1,000 traders, 4% of you, which is about 40 traders that are trading on a prop firm, are actually going to get payouts and see that next stage of their funded, right? And then 1%, which would be 10 traders out of that 1,000, is only going to be able to maintain that funded account, which is actually very bad stats in terms of traders that are purchasing funded accounts. So the ratio of people actually passing funded accounts and getting payouts is a lot lower than what you think. And influencers make it so easy, but the reason why these guys are passing funded accounts, and I'm going to get into it a bit later, is because of the system that they have in place, and why my students and myself are passing funded accounts and getting payouts. So let's just break it down, right? So stage by stage breakdown. Phase 1 pass rate. In the industry, right, from prop firms suggest only about 5 to 15% of traders pass the first phase of the evaluation, right? And then if we look at some examples here, out of 6,935 total accounts bought from a certain prop firm, 3,703 failed phase 1, meaning 3,232 passed it. The correspondence to pass rate is 46.6% for phase 1, but note this obviously is depending on what prop firm you're trading and as well as what evaluation stage you're trading. So it's either step 1 or 2-step accounts, right? So that's very, very important. So here we have 5 to 15 traders pass first evaluation stage from a different source from prop firms, and then we have a 46.6% pass rate in terms of a 2-step account basically, right? So the stats are pretty good, but I do believe it is actually a little bit lower. This is just some stats that I took from Google. But 46.6% passing phase 1 in terms of 2-step account, not 1-step account, as that will drop drastically as well, right? Because your profit target is a lot higher. Then let's go to phase 2. So this is a phase 2 account now. Out of 1,008 traders who enter phase 2, only 395 succeed to reach the funded stage. So we still have a 39.2% pass rate, which is pretty good. Again, I'm not to say that most traders are failing accounts always. I've spoken to a lot of guys that are passing accounts on their own. But where the real problem comes in is actually the overall funded rate as well as getting payouts. And this is where I see a lot of guys struggling. So a lot of people are finally getting funded and then they get excited and they actually lose accounts. If you've been in that position, make sure to like and subscribe and click that notification bell, because we're going to be giving you as much value as possible on this channel. So make sure you stay tuned and keep in, right? So VettedPropFirms.com reports that on an average, only 3% of challenge starters ultimately get funded right across different high well-known firms like FTMO, My Forex Funds, etc. Right? So if we look at the true funded trader, if we look at the phase 1 pass rate is 5 to 10%, and among those funded, only 20% actually receive a payout. So about 1 to 2% of initial applicants actually receive payouts. Other source note, less than 5% of traders reach funded status and stay profitable over time. So that's very, very important. So that's just the stats that we're getting here, just a summary table. Pass rate on phase 1, 5 to 15% in industry average, right? Phase 2, about 39% based on statistics, and then funded overall rate and actually getting payouts is anywhere between 1 to 3% right, of people getting these payouts and receiving it on a monthly basis. Okay, so the stats is not looking great, and overall what I've depicted from the Google and my experience with working from traders, your probability of a payout on a single account is about 5%. Okay, so each individual, other than the stats that we've got there, what I've depict and how I've worked with my guys and what I've seen in the industry, your probability of payout is 5%. Now that is very, very low in terms of one trading account, and that's why people tend to want failing. And I'm talking in terms of a two-step account. A one-step account, depending on how you trade in your strategy, you might even be able to get it up to 10% per trading account, okay, which is not bad. So I'm just working on average traders, their probability is 5% because they don't have the correct knowledge. They're just trading off, not even data that they built themselves, just off signals or whatever the case may be. So 5%. Now let's go into actually understanding how to diversify and where you're actually putting all your money in your basket, right? So if we look at it, let's just take a little tool here. So let's just imagine this is your basket, right? And you bought one funded account. Now this is 5%, right, on your one funded account. Your probability is equal only 5%, right, of passing, and you putting all your accounts or your money into one account, and this is your basket. So we have this saying, don't put all your eggs into one basket, but this is specifically what you might be doing. You might be putting all your eggs into one basket, and that's essentially why you are failing accounts, because you're buying these high-end accounts. Let's just say, for example, this is a 25K, okay, 25K account, and that costed you anywhere between 4,000, let's just say 4,500 Rand. So you spent 4,500 Rand on this trading account, putting all your eggs into one basket, and your probability of passing is only 5%. Okay, now let's just draw another basket here. The way that you should be able to do this, or the way that you should be doing this, is actually increasing your probability. Now you might say, Kale, what's the best way to increase probability? I mean, you just told me buying one account is only giving me 5%. Well, hopefully that gives you the answer. Don't you think by buying more accounts, having more eggs in your basket, increases that probability? So each account would be 5% probability of passing, okay, right, 5% probability of passing the account. And now you might say, well, Kale, I only got 4,500 Rand to purchase a 25K account. Decreasing your probability because you want to buy a high-end account, because okay, cool, if I pass this 25K account and I get 3%, right, 3% on that funded account, you're going to be making $750 on that payout, right? Now you're thinking, that's a lot of cash flow. Like, that's essentially what I want to do, and that's why I'm purchasing a bigger account. But then it brings it back down to, this is your probability. Why not split it up and to have, again, as buy multiple accounts and increase your probability, because this would make it 15%. Again, this is average, let's say anywhere between 15 to about 35% on passing those funded accounts and reaching that goal. Okay, so 3 funded accounts giving you the probability anywhere between 15 to 35% of passing and getting funded account payouts. I'm not just talking in terms of passing accounts, right? We're talking in terms of passing the accounts and getting a payout. Now, the way that I would break it up is, if we got 4,500 Rand, right? 4,500 Rand or $4,500, whatever you're working in, to get these funded accounts, split it up into 3 accounts. Now, essentially, let's just work in terms of what an average cost of accounts is. So obviously we're going to be working with 4,500 Rand here, right? And we want to split that up into 3 accounts. Okay, so maybe running to 25K is not always the best idea. And I'm just working off average, as I know, funded next $25,000 account costs about 4.5 or 5K. So we're just averaging it at 4.5. Now we're going to break it up into 3 accounts. Ideally, what we should be looking at, instead of a 25K account, we can look at $10,000 accounts instead of 15. So $10,000 accounts equals, let's say, per account costs about 1,400 Rand. Okay, 1,400 Rand per account. This is a dollar account. And we want to buy 3 of them. So times 3 will equals 4,200 Rand. You not only split up your risk, but you've increased your probability, because now instead of spending 4,500 Rand on one account, as you can see, now we spent 4,200 Rand with a 300 Rand little saving into 3 accounts, which inevitably increases our probability, right? Now this is just the gist of the system that we can start using, because all we want to do is increase our probability, as that's what trading is all about. Putting probability in your favor to make cash flow. So if we look now, we're getting into the exact system that I used to pass funded accounts. Now we've broken down, essentially the first step would be to simply not purchase one account, because your probability would be 5%, 5 to 10%, for example, where now you're splitting it up into 3 accounts, and your probability increases from 15 to 35% on an account. Now, again, when it comes to funded accounts, you're rolling them. It's okay to fail one and pass one, or fail two and pass one, because one payout on a $10,000 account, right? $10,000 account, you get one payout of 3%. You make 3% on your first trade. You push for a payout, and you sit on the payout is equal to $300. Okay, $300. Now, if we do the math of conversion from 4,200 Rand into what it actually is, 4,200 Rand costs $233. Okay, $233, and your one single payout from one account, what does it do? Covers the cost, right? It covers the cost on, even if you fail 2 and you pass one account, that one account, you hit a 3% gainer on it, and you sit on the payout, it pays for all 3 accounts. Now, probability, one account, you only need to pass one. You have all 3, you only need to pass one to actually pay for all 3. Now, doesn't that make a little bit more sense? So this is the exact system I use to pass funded accounts. But first we need to identify what it takes to pass funded accounts. Okay, cool. And also capital funded accounts. As we were talking about, we need to understand what capital we're actually working with. So in terms of if you're working with 10,000 Rand or more, or if you're working with 5,000 Rand or less, right? So yeah, in terms, I just use the example of a 25K if you have 10,000 Rand or more. Okay, it costed 12,000 Rand with the code legacy. Obviously it comes to about 10K for 3 25K accounts. Instead of buying $100,000, now you, yes, maybe working with $75,000, but again, increasing your probability. So then if you have 5,000 Rand or less, you know, $5,000 or $10,000 can work. So obviously we worked it out here, $180 equals 3,181 Rand, and the cost with the discount code would be 2,703 Rand. So you could definitely increase that to $10,000 accounts and split it up into 3 accounts as well. That you're averagely working with in terms of your phases, right? Nowadays, I'm so glad back then when we traded funded accounts, there was a time limit that you had to pass the account. It would usually be 30 days. It would be 30 days or 2 months, but now we have unlimited time, which is perfect, exactly what we're wanting. Minimum 5 trading days. What this basically means, you can't pass the account in a day, you need to trade 5 days. But if you so happen to pass the account on a day because of a crazy idea that you put a little bit too much risk on, which I don't recommend, just open and close a trade for the next 5 days, you will still pass the account. Leverage 10 to 1 with this prop firm, it is 1 to 50, but you can be working with anywhere between 1 to 10 sometimes, which is ideally not what you want to work with. 1 to 30, sometimes a prop firm gets you 1 to 80, but it doesn't really matter because you're trading with size. So risking 1% and putting 1% on an idea becomes quite easy as well with the leverage that they give you. Max daily loss is 5% on this prop firm. Again, it differs between the prop firms. Some of them are 4%, some are 3%. If you're getting instant funded, they I think are daily drawdown 3%. Max loss overall on this prop firm is 10%. Some only offer 6%, 8%, depending on what prop firm you're using again. And then profit target on a step 1 account will be 10%. And then 2 phase would be 10% and 5%, okay? So now we also have drawdown types, okay? Equity and balance. So what this basically means, and this is very important for any trader that is looking to get funded, is to actually identify what is the type of drawdown. So we have, as you start to grow your account, your drawdown, your daily drawdown and max loss will be accordance to what your account ends off. So basically, let's say, for example, I make 5% on the trading account, it would be $500 on the $10,000 account, right? That means if my overall drawdown is not going to be from when I first started, which would be obviously $1,000 loss and I'd lose the account on a 10K, now it becomes $10,500. So it's a moving drawdown type. Okay, so then we also have another option, or a different type of drawdown, and that would be where it does stay the same no matter where you make profit or lose profit. It doesn't matter. So you can have, let's say in another scenario, 10. So let's say another example in terms of this type of drawdown, if you had $10,000 and you made $500, which would be 5%, your overall drawdown is still 10%. That would mean, right, if you lose $1,000 on the account over the next few trading days, your overall drawdown will still be $1,000 that you need to lose to get the account taken away from you. So it is not a moving type of drawdown. Okay. Then we have gain split. That depends on what account you're buying. Sometimes it's 75% or 75% to you and 30% to them, or 25% to them, or it goes 80% to us and 20% to them. Depends on what type of account you're buying. First, withdraw. It will tell you the day that you're able to withdraw, and then refundable fees. Sometimes they have these little bonuses. If you reach 5% on the account and you request a payout, you get an extra, 2-3% added to your balance, which is quite cool. So the goal and focus, don't treat your account as a be all end all. As coming back to this illustration that I was telling you, if you have one account or you have 3 accounts, don't treat each account as your be all and end all. As obviously this becomes a lot easier if you are trading 3 accounts, but if you're trading one account, it's going to be your be all and end all. And that's essentially where you do not want to be, right? So coming back down to it, with each account you're able to split up your risk. And this is why I was saying you only need a 60% win rate, and sometimes that can differ. I mean, I can have a 50% win rate and still get payouts from funded accounts to pass and stay above the max loss to pass the account, right? You only need a 60% win rate, and this can differ. I can even have a 50% win rate to actually pass the account, but to stay above the max loss and daily loss, ideally you want to have anywhere between a 60% win rate and above, right? For example, as I was explaining earlier, let's say we have a 25K account and another 25K account. You buy one on Euro USD on one account, you make some good profits, right? The other account, you sell Euro USD and you take a small loss, a 3% loss, and then on the other account, you make another 3%. Now, the beautiful thing about splitting up your trading accounts is you actually splitting up your risk completely, and that's what I was discussing here, right? We are splitting up a risk. So if we were trading one account, right, and we took losses on all 3, essentially we would be losing the account, right? All 3 trade ideas. But here, okay, we are pushing up one account 4.72%, right? One account is down 3%, okay, maybe all of max drawdown is 2%. This is again just an example. Ideally, you must be sticking to 1% per idea, right? And then your other account, you're up 3%. Now you know when you pass this account and you pass this account, all you have to do is focus on this getting up, right? Let's say actually this account goes down, you're only taking A+ ideas on this account, then 10 to 1 you pass this account, right? Remember, A+ idea is basically anywhere between 5 to 6 confluences per trading idea. It's just a way to split up your risk. Let's say, for example, on the account that you took a 3% loss on, if you are only selecting A+ ideas on it because you're in a drawdown, your probability of getting back to break even and maybe a little bit of profit is higher. But where I'm up on an account that is 5%, I'll maybe be taking A grade or B+ ideas on this account just to try and get it passed. So you can trade ideas depending on where your account's sitting at. So obviously with this account, I'll take B+ or A grade. This account, I'll only be looking for A grade ideas because I don't want it to fail. And then this account, maybe A grade ideas still because we're up 3%. And overall, we need to hit that 10% on one-step accounts, or if we go in two-step, it's usually 8% and then 5% after. That's ideally what 10 to 1 it is working. So splitting up your risk and splitting up the way that you're taking trades on, depending on where the account balance is currently at, is a great way to stay ahead of the market and keep your accounts accountable as well. So again, probability of passing all 3 accounts is fairly low, but you're putting probability to pass one and get a payout is a lot higher, right? Anywhere between 15 to 35%. Your overall account is 75%, right? $75,000. Now this isn't speaking in terms of passing accounts. Let's say you pass the account, you sit on payouts. I like to sit on payouts where I push up the account 3-4%. So I would have sat on this payout, let's say on the other account, let's say we passed all 3 accounts, right? We're down on one account, we up on another account. Overall, our accounts were actually 4.72% on the payout stage, right? But we can still get a payout from this account and this account. We just need to focus on bringing up this account to get a payout again. I'm just speaking in terms of when you're in the challenge phase and when you're in the passing phase. Through this example, we have probability in our favor, whether we're in the challenge phase or when you're in the funded stage, our probability of getting a payout is a lot higher too. Now, if you make, right, most prop firms are offering funded ranges anywhere between, $5,000 to $200,000 profit splits, 80 to 90% per trader. Let's assume you manage 3 to 4 funded accounts. Each account is $25,000. Your monthly target is 2-3% per account. Your profit split is 80% to you. If you make 2-3% on funded accounts, 25K funded accounts, your raw profit is $500 on 2%. Your raw profit on 3% is $750. With the 80% profit split on a 2%, $400 is yours per account. So you would times that by 3, and this is what I was explaining when you are in the funded stage and you built up your funded accounts, right? You would have $1,200 payouts reaching a 2% targets. This would obviously be $1,800 payouts if you're hitting 3% on each account, okay? So just to digest everything I've kind of just told you now, passing phase, right? 3%, your probability increases to 15% to 35%. 35% if you have what? 3 accounts. So ideally, you want to be looking to get 3 accounts to increase your probability of passing it and getting it funded, as well as payouts, right? Now, the way to work funded accounts is, if you fail to and you pass 1, right? So each account's going to cost you in terms of the cost here. So in terms of cost, all 3 accounts is going to cost you about $233, okay? $233 for a $10,000 account. Obviously, work this towards what trading account you're actually doing. You fail 1, each account costs you, so you basically lost $77 here, right? 0.63, somewhere around there, times 2. So you initially losing $155, okay, 0.33. So you lost $153, but you passed 1 account. You push this 1 account to hit 3% payout, okay? That equals $300. Now, you do the math, $300 minus 155.33, $300 minus 155.33 equals 144.67. So now, what did you do? The difference is you already paid for the 2 accounts that you lost, okay? You paid for it with the 3%. You're actually making an extra profit of $144. Now, what do you do with this $144? Well, you don't go spend it on yourself. You buy 3 more accounts, because then if your profitability rate is passing 1 account out of the 3 accounts that you're buying, every time you do that, your probability should be that you actually have eventually 3 accounts that you're trading with, and each account's going to be paying you $300, okay, if you're hitting 1 to 3 and you're sitting on the payout of 3%, okay, 3%. You're sitting on payouts of 3%, times this by 3 equals $900. Okay, and that's when you can start to look to scale up your capital. Once you've got 3 fundeds that are passed, and you can, on a $10,000, for example, you can look to scale up to 25K accounts, because now buying 3 accounts just becomes a whole lot cheaper, because now you're using prop firm fund money to buy more prop firms. So ideally, that's how you should be working your accounts, from buying 3, passing 1, getting a payout of 3%, you're hitting and making a profit of $144. You're going to take that $144, you're going to buy 3 more accounts, right? Three more accounts. Then you can increase your probability again to 15 to 35% to get 3 more accounts, pass 1. And then if you continuously do the cycle, you should eventually get to $3,000 3 funded accounts with payouts of equaling to $900 per account if you're hitting 1 to 2s or 1 to 3 on each account that you are sitting on a payout. Okay, so that's what I just wanted to digest here so that you understand exactly what you should be focusing on. Now, the way to actually pass funded accounts is having a proper trading plan. This is so essential. I know a lot of you guys are utilizing your own trading plans, but the way that I teach my guys is try and take 1 trade a day, okay? London session, you need to decide which session you are gonna trade. Don't trade all sessions, otherwise you are gonna, put yourself in a position where you're probably gonna be failing the account. So London session, obviously this is the time. New York session, this is the time. And then Asian session, this is the time. So stick to 1 session, okay? 1 session, because it's gonna help you a lot in terms of staying consistent in your trading accounts. Having a proper trading strategy, having entry criteria is very, very important. Trading confirmation and confluences, don't just enter trades for no reason. And exit criteria, having a playbook of A+ setups, sticking to rules, management criteria, these are all very important. Here of what an A+ playbook looks like is all your A grade ideas that execute your strategy to the T. You're going to be taking a screenshot of that and you're going to be placing it in your playbook, because that's what you're going to be looking for in terms of your trades on a day-to-day basis. If you have between 10 to 15, I can guarantee you should start making money. Right? Report cards, very, very important, especially when you are trading multiple accounts. You want to stay ahead. You want to stay ahead of your trading performance and identify exactly where you're lacking. So we have a few examples here. Quick mitigation before stop loss. Remember, trading fund accounts, you don't always have to take that 1% loss. You can take 0.5% loss. Holding size of full TP. This is again an area where I see a lot of traders costing themselves money because they are cutting their profits too early. Good execution, another area of making sure that you are executing exactly to your trading plan. Setups you're actually taking within a week or within a month, psychological review, etc., etc. There. Build your own report card if you don't have one already. Set goals and score yourself out of 5 or score yourself out of 10 on how you're actually performing in terms of that goal that you set out, right? We're doing this and we're holding our students accountable to the report cards that we've set out for them. This is just a template that we use. They set their own goals that they've discussed with us so that they can stay ahead of the market, right? And then you must reflect monthly on it, okay? Very, very important. This is just an example of one of my funded accounts that I'm currently trading. I have a 58% win rate, okay? And you can see that my P&L is 69,000 Rand. I'm doing a funded account challenge with you. If you guys haven't seen it already, make sure to go check it out. But this is my other account that I've been taking the exact same trades on, and I'm sitting on a payout of 70,000 Rand at the moment. We're up 3.5%. As I said, I like to sit on payouts, but we can clearly see that having a win rate of 58.60% on average can get you payouts. Average win that I'm taking is a 2R, right? And my current balance is currently sitting at 2,069,000 Rand, right? So what you want to see is your equity curve will have some dips. That's perfectly fine, but you want to see your equity curve continuously growing, and you want to see the average trades that you're taking, your losses, where your wins are, because this is very, very important to identify what you're actually trading. Is it making you money? Is it not making you money? I mean, a lot of guys are essentially trading gold, but they think they're making money on gold, but they're actually losing more because they're making money, let's say, for example, on Euro USD. That's where their profits are coming from. They lose on gold, in the third trade that they maybe just make back what they lost on and not actually making further profits on the trade idea. So identifying what is actually the pair that is making you money and sticking to that as well, not diversifying yourself in millions of different pairs. Try and stick to about 3. It's really helped my students. But I hope this breakdown kind of gave you an idea of the system that I'm and my approach to passing funded accounts. Putting probability in your favor, because that's essentially what's going to get you to that payout stage. And if you are not getting, if you're doing this system and you're still not passing funded accounts, then that just comes down to a strategy, and you might not be building up the right data behind exactly what you're doing on a day-to-day basis. So hope you learned something. I'm going to be doing a lot more videos like this. So make sure to like, subscribe, turn on that notification bell. I did say it earlier in the video, but yeah, peace out. Enjoy the rest of your day.